Good morning, my name's Paul Nicol, Managing Partner at GFM Wealth Advisory. I'm here to interview David Leslie, Investment Director of the Ellerston JAADE Private Assets Fund. This morning I'm going to be talking with David about private asset investing and also getting an update on the Ellerston JAADE Fund. Good morning, David.
Hi, Paul, thanks.
David, I guess my first question is, what is private asset investing?
So private asset investing is any unlisted company. So you think about, you've got companies obviously get to a certain stage of life when they're starting to look for external capital. We're trying to find the best private companies with the best growth profiles who are looking for investors who can add capital but also add a little bit of value during the journey. So in our case, private assets are companies that are probably looking for a realisation event. In many cases it might be an IPO, but it may also be a trade sale or some other form of realisation over a 2 to 4 year period.
So why did you set up Ellerston JAADE?
So if I go back far enough, my background is I've been at Ellerston for over 15 years and spent a lot of that time doing public markets and looking at listed companies. For a long time we've seen some of the powerful themes that are emerging for unlisted and private companies, and we recognise that many of the best companies were staying private for longer. So we've been through iterations of investing in private companies. But the big evolution for us with JAADE was really taking our investment capability and the deal flow and the pipeline that we get, but bringing in operating partners who could help us not only to identify and to complete investments, but then to add value to them through improving operating strategies and working with the companies to really mentor them towards where they can reach their goals.
So how do you go about identifying opportunities? Is it hard to find these companies to invest in?
So over the last 10 years, we've been investing in private companies. We've met a lot of companies along the journey, and we really only do 2 or 3 deals a year. It's not a high volume business for us, so it's not like listed companies where you might be doing a different trade every now and again. So we've got a database of companies that we've known. There's sort of 20 odd approaches that we get. Many come in through the front door, but the best investment opportunities we get are usually warm introductions. It might be through you or your clients. Sometimes they're through our business relationships, but many people know Ellerston Capital, and there's a lot of opportunities through our network that sort of find its way to us. It's about getting to know those companies over a long period of time and making a slow and very deliberate decision that everyone's aligned.
The investment criteria, what is it that you're looking for in these companies?
So there's really 3 key things that we're looking for. We're looking for established businesses. We're not about investing in startups. There's a world of venture capital investors out there. We're growth capital or expansion capital investors. So we're looking for businesses that have at least $10 million of revenue, later stage expansion capital, and we're looking for businesses that have recurring revenues. So we're looking for companies that use technology to create a competitive advantage. We love when they're disrupting markets, but there has to be a recurring revenue to what they do. So we have visibility, whether it's through software as a service, platform businesses. We have to be able to see that their business model means that companies and clients are coming back and reusing the platforms. So we assess the lifetime value of their clients. We're also looking for that alignment between management, founders and whatnot. And so it's really important when we make an investment in a company, it's clear that we have the same goals around the ultimate realisation. So it may not be right, but if there's a young founder who wants to build a company for the next 30 years and they see themselves as being a private company, that's not for us. We're trying to find those companies that are equally as aligned to wanting to have a realisation and outcome as well.
On the Ellerston JAADE Fund, how many assets have you purchased so far? And perhaps could you go through one of the stories or one of the investments of the fund, let's say something like Mabel?
So we've made 4 investments so far. Mabel was the first one. We've also invested in a payment processing business, Tyro, which has already had its IPO and we've had a realisation. We subsequently invested in a business called CAMS, which is a Adelaide-based enterprise software company in the global risk and compliance space. And then the most recent investment is SiteMinder, which is a platform that helps hotels manage their hotel inventory. A bit about Mabel. Mabel's probably the youngest company of those in the portfolio, and it's doing something incredibly innovative. They have a marketplace business, so they are connecting on one side of the market families who have a requirement around home care services. So either through the disability market or through the aged care market, they're looking for carers to look after their loved ones at home. On the other side of the market, you've got the workers and the carers who are looking for other ways of working, more flexible, more gig economy style employment. So if you think of Uber, which is a marketplace business connecting a driver with the customer, you make that connection once and then there's no ongoing relationship. The beautiful thing about how Mabel works is it creates a relationship between the family acquiring the service and the workers. What that means is you're seeing, for someone in the disability sector, lifetime values and contracts that go for many, many years. So what we love about this platform is not only is it creating more flexibility, it's disrupting the traditional employment style models where you have lots of overheads for administration, but it's actually a really efficient model that creates long-term benefits for both the clients and the worker, and Mabel's using technology to really engage that platform.
So how do you see, in a well-diversified portfolio, what benefits do you see of investing in private assets?
So one of the key things about what's happening with the way capital markets are evolving is there's a greater pool of liquidity available for unlisted companies. Many of the highest growth and best performing assets may seek to get capital from unlisted investors. It might be growth, it might be liquidity, but it's not necessary that they're going to end up on the ASX. It may be that they get swallowed up as part of a global private equity business or a global acquirer. So I think to not have an exposure to private assets means that you risk missing out on some of the best growth stories around in Australia. I think if you look at the attributes of the ASX, where you've got increasingly growth's harder to access, valuations for high growth companies have expanded, I think private assets enable you to access those assets, but at a material discount, some 30 to 50% cheaper than what you're paying for the equivalent listed companies.
And so, David, on that topic, how do you, after a very strong run in investment markets,
Yep.
how do you view the opportunity of investing in public markets as opposed to investing in these private assets?
Look, public markets, you have many of the greatest companies around, but I think the challenges exist for large businesses as much as anyone in terms of the disruption that's happening in the economy. Ultimately, about creating wealth is looking for growth opportunities and finding value. I think in private markets, we can find great opportunities, high growth. We've got that 30 to 50% discount. If we can work with these companies over 2, 3, 4 year period, I think we have an opportunity to far exceed what you might get out of just participating in the equity market. We're targeting a return of around 20%. And I think with the tailwinds of growth in the sort of businesses we're investing in, but also that revaluation as they go on the journey, I think we've got a good opportunity to achieve those targets.
How do you feel like you add value for your investors? So how does Ellerston JAADE add value for the end investor?
So every time we look at an investment opportunity, we're always looking for that value-added lens. So if you look at the 4 partners of JAADE, I've spent the last 15 years at Ellerston advising, getting involved with public but predominantly private companies for the last 10 years. Anthony Clock, my partner, he's run businesses, he's been a corporate development advisor, he was the head of business development at PBL, where he sat on the boards of Seek and Car Sales. And then you've got Tony and Jamie, who as part of their journey at Aristocrat, have turned Aristocrat into a global powerhouse. It's now at 20 billion, it's one of the top 20 ASX listed companies. So we each have a lens that we look at companies and we can see where there's opportunities. So whether it's taking CAMs and really fleshing out what the US market entry strategy looks like, leveraging what Tony and Jamie did with Aristocrat in the US, whether it's looking at product marketing strategies, customer acquisition models, there's a lot of experience collectively amongst the team where we've seen these movies before, and we really try to mentor and work with founders to help them to realise the most out of their assets. So we try to be very differentiated when we pitch to a company why they should have us as an investor. It's a deep and it's a very important relationship that we all feel we can work together and add more value to them than just taking capital.
Great, and one last question, how does the pipeline of investment opportunities look?
So one of the great things is over the last 10 years, there's been an ever-growing pool of venture capital and seed investment going into all of these technology companies. There's no shortage of people looking to put money in at a very early stage. As these businesses move through the nursery and become adolescents and go to high school, those are the companies where they've got 20, 30, $50 million of revenue, where we feel that there's a really great opportunity as those businesses are growing. It looks really good. So, we're only trying to do 2 or 3 deals a year, so we've got to be very, very careful. But, there's a growing list of businesses that are using technology to disrupt very large markets, and, I think we're on track to do another 2 or 3 deals this year.
Terrific. David, it's been fantastic this morning. Really appreciate an update on the Ellerston JAADE Fund and on private asset investing.
Great, and I appreciate all the support. Thank you very much.
Good on you, David.